Welcome to our weekly Forex and Gold forecast. My name is Jay Norris. I'm a trading instructor at Trading University. As always, we need to remind you that trading involves risk of loss and is not suitable for all investors. First market we're going to take a look at will be the Australian dollar. Pretty bulled up on the Aussie still. You can see it held that trend line a couple weeks ago. It's really shrugging off dollar strength, or we should probably say euro weakness. That definitely has been the case. Aussie shrugging it off. I think the Australians, they've been through hard times, which explains the bear market over the last couple of years. But this secondary move is still in a bull stage, and it's got legs now. So keep an eye on it. We would expect a continuation of the pattern that you see in place, which is higher highs, higher lows, higher highs, higher lows. So until it really breaks that pattern, we would suspect more of the same. The one thing I would caution, look at how small the ranges are. So you're seeing consistently smaller ranges. That's telling us there's not a lot of participation in that market, not a lot of volume in that market, but that doesn't necessarily mean that it can't keep clawing higher. Next market will be the dollar Swiss. Fascinating pattern here. You finally broke this long-term pattern of lower lows and lower highs. In fact, you put in a double bottom here, and now you have a higher high, and it's the first time in a long time it's done that. A technician would tell you that there's something fundamentally bullish in the undercurrents for this market, and that's what really created that movement, and we'd have to agree with that. Granted, you have a big double top. Now, our overall target, or I should say our shorter term target, would be 90 even. We think you'll see 90 even for the Swiss. You had some pretty good buy opportunities throughout the week in this market. It's got to wrestle with that 50% resistance right now, which it's doing. But we think 90 even is in the cards. And of course, what's so fascinating about a pattern being broken, a pattern shifting from lower highs to lower lows, lower high to a double bottom, now a higher high, is that next dip will be most interesting to watch, because if you get a higher low, that's going to signal a full-blown reversal in this market. That's going to be pretty exciting. So let's keep an eye on this guy. We still think you've got the legs to get to 90 even with this what we'll call a shorter term hiccup here, this shorter term rally. Next market, the dollar index. This is really a tale of two views of the market. When you look at just the daily chart, it's just another hiccup in a down move, right? Not a lot to it here. On the other hand, when you pan out to that weekly chart, you get a market that's holding structure. This is a tough looking chart. I mean, you had a nice rally up to reverse things, and now you're just going sideways. So pretty strong market here. Good looking view of it here, where you have a nice double bottom in place. And the dollar index, it's in a position where long term, we pan out to that monthly, you see a reversal here. That could potentially be a big one. And there you go. There's your monthly dollar index. So a lot of room up above, and really it's a good looking chart on the weekly. So we'll have to keep an eye on that. Next market will be the euro. Similar, here's a weekly chart. You can see the market's at long-term resistance right here. Knock it against it. You have a double top in place here. Let me drop down to the daily chart. Really, last week was it was euro weakness had been the story. So we'll see. And we even pointed out last week that we think it's going to get to these levels here, 136 and change, and it did. And this is a big level for us. It's significant that you took out the April low for sure, but you didn't close below it. So you definitely have support down here, strength down here. So this is a very interesting area of the chart that the euro is going to have to prove it can get through it before we can get too terribly excited about the downside. You get a weekly close below that green line, though, below that RTT level. That's going to be pretty significant for us. In fact, that would shift. That would mean a full-blown bear shift for us. That would shift this bullish pattern that's been in place for some time now, going back a year or so of higher highs, higher lows, higher highs, higher lows. So that's the deal. You've got to take that level out really to look for it. the market to start selling rallies in earnest long term. Short term, however, we like selling rallies short term, but you have to keep in mind you have big support down here just below 36.50. So the party could end abruptly for the bears at that level. So that's something we're going to watch. The gold market, it looks to me like accumulation just above the 1280 level. Now, gold's a tricky animal. Here's why. Now, normally I'd say, yeah, that's accumulation to me. This is a bullish chart. However, gold's a funny one because, as excited as gold bugs get about gold, and as much as the older generations respect gold, in the end, there's no interest on it. They actually charge you to store it. So there's a carry fee associated with it, and there's no interest on it. So it's a wild card. I mean, just because it looks like accumulation to me, just because it looks like you're putting in a nice saucer bottom in a support zone, that doesn't mean that someone can't pull the rug out from under that and dump gold and take this market down again. It looks like accumulation to me on par. This looks like a bullish chart. However, it's not a true asset class market in my estimation. So, and it's a commodity too. So they're always very tricky. Here's dollar yen. Similar chart, dollar yen, just a bigger formation. You see that the nice rally, nice big rally, and then the market's going sideways. So again, to me it looks like accumulation. Professionals buying dips on the approach to 101. Short term, it's still bearish though. We'd like this market all the way down to par. Yeah, if I like that 101, I love it at par. So I wouldn't mind waiting for a turnaround at that level, 101 or par. And if you get a trend line reversal, you get a momentum shift, ideally you start to see some volume on the upside. I like dollar yen overall. Okay, hey, thank you so much. We'll leave you with this thought on the markets, and potentially this can make your trading a little bit easier. It's much easier to follow the path the market has laid out for us when we have no opinion. That's for sure. Thank you so much, and we'll see you next time.